Hey, good afternoon, everybody. This is Neil with Simpler Trading, and more specifically, the Voodoo Mastery within Simpler Trading. And we're doing the end of week wrap up. Second time doing this. First time I did it, no audio. How about that? But here's what I said a minute ago that I'll say again. Where are we now, and how did we get here? That's the what I want to look at. All right. Now, last Thursday was the high for the week. It broke wildly into the low of Friday. At that time, that is an outside bearish engulfing on the weekly, taking out a prior weekly low and blah, 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 and etc. And so reasonably anticipated up to about a 382 and roll for an extension of whatever that uptick was. Probably be about the daily 50, which by the way is still the bear target. But what happened, and if you caught my earlier video this week on I think the 4th earlier this week, what happened was Monday opened up with what's called an open drive. The open was the low. It took off right out of the gate and had follow through immediately. And if you caught that video, you might remember I told you I've done research on this and figured out that that's one of the opening types that is most likely historically to lead to what ends up being a trend day, which this did. So a trend day to me is it opens on one side, closes on the other, does it on expansive range with minimal retracements throughout, carries point of control out with it, and it did all that. In fact, it went out on the high. So what we find is indeed that warranted follow through. So now from the low, what do we have? Don't worry what we were anticipating, but what we have. Once it's beyond the 382, I figure it's probably going to the 618. We'll cover that in a minute too. But we do have follow through. All right. So watch as we climb here. We go higher lows all the way up. That's called one-time framing on that time frame, on that time periodicity, right? This is a daily chart. So I can say we're trending up, and you can say, well, maybe not, but what time frame? And I'm like, well, the daily chart, clearly I've got higher lows. That's one time framing. If you got higher lows, you're not going down, right? So that's pretty clear. So another couple of things about this. Once you clear the 618, which it has, it's high probability mid 80s going for the historically for the 887. And I'll tell you the same thing about the 887. Now, there is overhead at the 887. You can see that's where the down started, right there, right at what is now the 887. There is overhead at the 887. That level is about 64.0. Let's get it. Call it 5. And this is SPX, not ES Futures. This is SPX, okay? So we'll say it's overhead until it's not, because I can tell you the same thing about it. Once you get and hold above it like it has the 618, you got 3 targets. First, new high. Second, 1272 extension. And next would be the 141.5, 141.4 or whatever. But anyway, you know what I mean. So until we see signs, let's talk about that next. Until we see signs of, well, what would tell me that maybe that's overhead and it's starting to roll over? Well, you stop doing what you're doing right now first, and that is making higher lows. So the very first thing it would tell us is it would tag the 887 and fail, and it would take out a trailing low. So say Monday it reaches up there and tags the 887 and fails, and Tuesday takes out Monday's low. That'd be your first okay, heads up. That's a little warning. Not a big one, but a little warning. So right this minute, I can tell you that the very first warning sign for Monday is to take out Friday's low that will end this one-time framing up, only putting this chart into neutral on the daily. That's all it does. It does not establish a down. But I can tell you that if it reaches down here and takes out this Thursday's, which is what? Which was the 7th yesterday, then you're going to have a real hard time. I'm telling you what I think. Everything I say, by the way, is what I think, right? I mean, I say, well, you're going to, well, this is what I think, right? It's going to make a new low. and for the move, and when it does make a new low for the move, it's going to reach down here, and it's still the same bear target. It'll just be the daily 50. That's just T1. After that, that's like, call it 6150. After that, it will be, I think the number is 6010, but that's in the ES, and the reason for that is that makes the rollover gap from the June to September roll, right? So what we have to worry, you got to trade the chart that we're looking at though right now. I'm telling you what's going on right now. This train is headed northbound. You could throw everything you want to throw at this market, and it just keeps fighting back, right? Just when it's down the other day, you get news right toward the end of the day that there's another nomination, Fed chair, or Fed not chair, but Fed governor nomination. Boom, man, that's it. It takes off back to the upside. So what I can tell you, if we're just looking at the chart that we've got right here, it's, as long as it's making higher lows, you know what that means. Now, seasonally, historically, the S&P loses 0.5% in August. So I would beg the question then, does that mean that this thing's ignoring then seasonality? I guess, possibly. I mean, it's certainly not lower. And unless something changes, and it'll probably take some news or something to do that, unless something changes, and that's why I'm trying to give you what is the warning sign, because until then, we have up to the next target. Then we have evaluation. You can see the turn right there at the next target. We have up to the next target. Then we have to evaluate there exactly what we were doing at the 618, and that is, can you get through the 618? The next day answered, yeah, sure. Today answered, follow through. Okay, so next 887. I'm going to ask the same question at that point. That's overhead right now until the chart does what it did yesterday, Thursday, and says nope, no longer. It's not. Tuesday, Wednesday it was, right? And we'll ask that same question again here. You get and hold. You close, just basically close above the 887, and I'm just telling you, but you got the next target is a new high. And you really got three targets. You got new high, any new high, but new high for the move. That's a T1. T2 is 1272, and then the third. Now, since you can count with me here, since that was Thursday, Friday down, you can count with me here. This is Monday, Tuesday, Wednesday, Thursday, Friday. All of those days are inside last week's range, right? That's a Harami candlestick pattern. I do have a trade set up on the weekly chart. Let's go to weekly real quick. I do have a trade set up on the weekly chart based on that information, and that is that this week was an inside range that can allow for, it takes time. It's going to take a couple of weeks, okay, because it's on this time frame that this pattern is showing up, that can allow for a new high for the move, and it's still roll over. We'll have to touch on that as the trade progresses. But I'll just give you a preview into what that can look like, all right? First, inside range. Well, first, trend move into it. Yeah, got it. Next, inside range. Got it. Next, some high after, I don't care what it is. That's why I say it can make a new high. Some high after this weekly candle, whatever the high is. That's next week. Then the week after that would have to finish with a lower high than whatever next week's high is. If that's the case, then we have a short setup. So on a weekly chart, given this Harami inside pattern, I do have a trade set up that can allow for a higher high, a double top. It doesn't matter. Next week, whatever the high is, that's the high that we have to close with a lower high afterward. And if that's the case, then yes, we have a short setup and trade and stop and target on the weekly chart. But I'm carrying you couple of weeks, ahead, and we don't need to worry about that right now. What we need to worry about is the chart that we're faced with right now. And what does this mean? It means we're above the 618, we're headed to the 887. Above that, we're going to new highs. How do I know if this thing starts to roll over? Stop doing what it's doing. What is it doing? Higher lows. Oh, so roll. Possibly Monday tags at 887 and Tuesday takes out Monday's low, or possibly Monday just rolls and takes out today Friday's low, right? Either way, you have to stop doing what we're doing right now, and that's making higher lows. So seasonality, question mark? I don't know. I mean, I know what it is historically, but I know we're not doing that right now. Ignoring it, I guess, right? And we have to respect what we've got in front of us until that picture changes. Okay, so simpletrading.com. We're in the Voodoo Mastery. We do this all day, every day. I got one short off today, and let me tell you. I'll put it this way. Well, I got another one going right now, actually. But here, I got one going right now, I guess. But I had one go off earlier today. But here's the thing. And it was really, really, really good, timed and target and everything. But it was 10 points. That's it, 10 points. I'm looking right now, the S&Ps are up 45 on the day. You want a short for 10 points? Or is that a 10-point retracement for the fact that you're up 45 on the day? Case in point, that train is northbound right now. What I'm trying to do is show you that and give you the warning signs for when and if that changes. Good trading. See you next week.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me